I'm Teresa Carraggio, and this is Third Paradigm. Hervoge Marique of Geopolitics Empire interviewed Gabe of Libre Solutions Network and Mathew Crawford of Rounding the Earth on Bitcoin's rise and its future role, digital gold or Tulip Mania. I then summarized that discussion in which I think Gabe has the courage to ask the simple questions. I would even say simple-minded, but only if my viewers understood that I mean that as the highest of compliments. Then I look at a comparison where Mathew and I had a long discussion in the comment thread where he laid out the different advantages that he saw of Bitcoin, and I looked at my reservations about it. So here I want to do a point-by-point comparison of why I think that the Caret fulfills all of those functions better than Bitcoin does. And those functions he listed as inflation, scams, laundering, dark markets, organized crime, lack of fluctuation, government treasuries that reward oligarchs, building generational wealth, economic migration, mining, exploitation of poor nations, beneficial development of energy supplies, taxation, and military aggression. And his final point of aligning incentives in a direction that would change everything. Financial blobs and fundamentals. In the interview, Gabe traces his interest in Bitcoin back to 2014, when it was on the rise as a resistance currency. But now, he says, it's seen as digital gold. He asks, why are the big industrial players like Elon Musk invested in it? Is this good or nefarious? How does it influence politics, and how do politics, like Trump's election, impact it? Mathew talks about the bill for the U.S. in front of Congress to buy 200,000 Bitcoin a year for 5 years, or 1 million Bitcoin, and how he thinks it could flip the U.S. debt as the reserve currency. If Bitcoin goes to $10 million each, as he says it might, that would be $10 trillion, erasing the U.S. debt. Gabe goes back to the big question of how do we rebuild civilization after it's been under attack for so long? He suspects the collapse has already happened. The reserve currency, he thinks, is a pump and dump that isn't addressing the foundation. Gabe doesn't see Bitcoin being used for transactions any more than gold is. There were two things that Bitcoin was meant to solve, he says. One, ending central banks' ability to print money and devalue the currency, and two, make international transactions free of fees. He defines Bitcoin as a 10-minute auction that becomes less useful as a transaction as the amount gets larger. Was this to divert all of the energy, he asked, just as CBDCs were being launched, the central bank digital currency? Now, he states, mining is consolidated into ASIC farms, and big players are buying it up. Gabe goes back to young people who are begging for a way to contribute constructively, but instead there are smoke and mirror industries that don't make anything. Mathew referred to Bitcoin as an energy certificate and said that people will use the currency that costs the least in energy. Gabe goes back to the fundamental question: how can we restructure our digital landscape so that it can't be weaponized against people? Answering Gabe's concern about scams, Mathew says that all the crypto scams are a drop in the bucket compared to the ones run through traditional currencies, including inflation. If you don't educate yourself, he states, you will be ripped off left, right, and center. Hervoge asked about the Tulip Mania and whether it could go that way. Mathew says that if it's replaced by a technology that makes everyone more prosperous, then it sucks for the people who get burned, but don't put all your eggs in one basket. Hervoge asks what they see the price going to. Mathew answers $200,000 to $1 million per Bitcoin in the short term, but now that the finance blog and US government are buying, $10 million is reasonable. Gabe says that Bitcoin is volatile, and Mathew pushes back that it would only go down if the financial blob dumps it. And why would they? Gabe answers, margin requirements. Stocks go down and they need more liquidity. Mathew says they have wealthy investors to draw liquidity from. Hervogé talks about precious metals, Bitcoin, and land being three components of investing because they rise together. He also mentions a program that he's taking to recognize scams. Mathew points out that gold is a robbery risk for transactions, and paper gold is hypothecated into trillion-dollar intergenerational scams. Gabe states that it doesn't solve the fundamental problem of governments working against their own subjects, also known as citizens. Caret and crypto. To compare Bitcoin to the Caret, which is my system, is really to compare guava to kumquats because they don't serve the same purpose. In my book, How to Dismantle an Empire, I distinguish between money and wealth. Money is the ability to take the products of other people's labor, whereas wealth is the ability to control your own labor and survive on your own labor. While money can be individual, wealth is only through some form of community. So Bitcoin is about preserving the value of money, whereas the Caret is about building community and intergenerational wealth. Bitcoin is a speculative investment valued at what someone will pay for it in a central bank currency. The 10-minute auction puts it out to the market the same as a stock. If there are more buyers than sellers and buyers think they'll be able to resell it for more, they'll pay more central bank currency for it. If the trend starts going down even a little, it could plummet to nothing because no asset actually backs it, and buyers might want to unload it before it goes any lower. Rather than the acronyms BTC, it should be BCI for Bitcoin Inc. It's the same as a tradable share in a public company that doesn't invest in new production, but is the same as a gambling chip. Bitcoin, like gambling, should only be done by someone who can afford to lose. This is Fidelity's disclaimer, which I happened to see when I went to their accounts on their crypto. Fidelity Crypto is offered by Fidelity Digital Assets. Investing involves risk, including risk of total loss. Crypto as an asset class is highly volatile, can become illiquid at any time, and is for investors with a high risk tolerance. Crypto may also be more susceptible to market manipulation than securities. Crypto is not insured by FDIC or the Security Investor Protection Corporation. Investors in crypto do not benefit from the same regulatory protections applicable to registered securities. And yes, I know that Fidelity's business is in registered securities, but I think it's an interesting point. When Hervogé suggests buying land, Bitcoin, and gold in order to diversify, he's talking to those investors who could afford to buy land outright. I'm talking about, with the Caret, the other 99% who are drowning in debt, who are struggling to pay their rent, who are going to lose their house if the variable rate mortgage goes any higher. So they're the ones who have energy and skills and would love to be contributing to their community, but there are only these high-stress bullshit jobs that make the rich richer. And the last thing they want to do with their meager savings is give it to those rich people who own those ASIC farms and who are burning energy in utterly useless activities in order to produce this Bitcoin. The purpose of the Caret is to build family and community intergenerational wealth, also known as self-reliance. It takes the collective mortgages of a commonwealth, which is 200 to 300,000 people, and distributes them as targeted subsidies to all commoners, and everyone needs to be a commoner of somewhere. There are upper limits on how much one person can make so that inflation, which is really dilution of the value relative to housing, is reversed. The measure of a Caret success is the increase in resident home ownership, small local businesses, and small local landlords. Digital gold. Now let's look at the bill in Congress for the Treasury to buy 200,000 Bitcoin a year for the next 5 years. In my conversation with Mathew in the comment thread, he wrote, "I believe that if Bitcoin becomes the reserve, it will be the least volatile reserve in history. Was the sterling less volatile in the years leading up to its adoption as reserve? The dollar, any of them?" So if one Bitcoin trades for $1 million, as Mathew thinks likely in the short term, 200,000 Bitcoin would cost $200 billion. This would be a transfer of $1 trillion from the Treasury to the richest people on the planet who have these ASIC farms, along with a lucky few dabblers. But with a guaranteed government purchase, why sell early? It can only go up as demand outpaces production, even with energy to burn. Is this not money laundering? Is this not the greatest scam since the Federal Reserve? So that would be like members of Congress with shares in defense contractors approving gargantuan military budgets. Except with crypto, the selling point is its secrecy. So we wouldn't even know how much they held or how much had been given to them in order to get them to sign this bill. It's a curious thing, too, that before this, the only way I'd heard of the term crypto was in Crypto Jew, which is someone who had, in the Middle Ages, pretended to convert to Christianity, but still had their loyalty to other Jews. And crypt in crypto means death, kind of like the mort in mortgage. Interesting. So after this $1 trillion was transferred from the Treasury to the oligarchs, there would be no way to ever get it back because no private investor is ever going to buy $10 million Bitcoin and be stuck with that. And if they started selling, it would mean that the whole thing would plummet and that would flood the market. So I don't see that happening. Fed up with the Fed. Bitcoiners seem to think that inflation is caused by government printing money, even though the Constitution only gives Congress the right to borrow money, coin money, and endow banks with the right to issue circulating notes, aka dollars. So the federal government, which is 6 syllables, compared to the Fed, so it's usurped the name along with its most important function, has to then pay foreign debts in actual precious metals, according to the Constitution. States and municipalities are forbidden to coin money or issue credit or make anything legal tender other than gold and silver. If the government could print money, why would it be in debt? The greatest power of government was given to the bankers, as evidenced by the Federal Reserve note in your pocket. It reserved only their ability to stamp coins and set their value, which is called seigniorage. However, there is no limit on what value they can set. Under my plan, 3 platinum coins are minted and given a value of $1 trillion each. Those can then be the debt-free money that the Treasury can issue credit against to the Commonwealth banks at a rate of $9,000 per person. That becomes their capital. Under the authority of Congress, banks can loan 10 times the amount as their capital. So that ends up being $90,000 per person for those mortgage loans. Congress would not endow private banks under my plan with the right to issue circulating notes as debt. So this would end the Fed and replace it with a network of Commonwealth banks that are neither states nor municipalities, so it wouldn't violate the Constitution, and therefore they wouldn't be forbidden. The amount that can be issued is capped by that 10-to-1 lending rate unless that Commonwealth adds to their capital. The Caret takes no more energy to issue than a few strokes of a keyboard. It requires no mining in the earth or in the ether. It will always keep pace with the cost of housing because it's produced by mortgages. The refinance rate can be set at 3% initially and raised to 5.3% over the course of 5 years. That way, all mortgages are going to transfer to Commonwealth banks sooner rather than later. Mortgage costs will come down for local homeowners, and the value of the Caret will always match the value of housing. Flim-flam scams. Mathew says that Bitcoin scams are a drop in the bucket, a learning curve he's not bothered by, and that if you don't educate yourself, you're going to be scammed left, right, and sideways. I think that's a little callous, when ordinary people should not have to be savvy investment professionals. They shouldn't have to take courses on how to not get scammed. These are retirees we're talking about, who are just trying to get through the rest of their lives securely at a point where everything is working against them. I know one person who set up the transfer mechanism for crypto and had his account drained, although he was able to reverse that. And then I have a friend from Molokai, and he got scammed, and it was only $300, but it was a text that was sent from a friend's phone and asked him to buy some gift cards, and he didn't even use bank, so he took money out of a jar and went and bought these gift cards and sent the code. Then when he saw his friend, he could tell, like just by looking at his face, when he asked him, "Did you ask me to do this?" And he told me that he felt like killing himself. And it wasn't the money, it was the shame and the embarrassment. And that's what we're up against, is this sense that it's all our fault, that we are just so naive and so gullible that how could we have done that? We feel stupid on top of having been scammed. In that case, the friend from his dojo collected money and they gave it to him in a card. So it's a happy ending, sort of. But is it right that we're always under the constant threat of being scammed? With the corporations, insurance companies, banks, and government the biggest scammers of all. Everyone around you is out to get your money. That's the reality of transactional relationships, which is what we have instead of community. The best you can hope for is that people take your money in a fair deal. The more that you need what they have, the less likely that is to be true. Security instead of gambling. The Caret is like leprechaun's gold. If you steal it out of the Commonwealth, it vanishes and leaves a yellow streak leading right to the culprit. It's not an anonymous transaction. The Caret is because you are a commoner, and so you end up belonging to that Caret, and it's taxed differently based on how you spend it. So it's a relationship. It's not just an anonymous transaction. The word credit comes from credere, meaning trust or reputation. So to review, the Social Security Trust Fund enables mortgage loans at 10 times its value without diminishing the fund. It acts as a cap on lending, but it isn't loaned out itself. At the minimum mortgage rate of 3%, it would return 30% per year on the fund. So the trust can be given a 7% return, keeping Social Security viable forever. Participants can count on it in retirement, and lowering the age back to 65 might be feasible. In addition, for long-term savings, the Commonwealth can give a substantial interest rate, like 4%, with limits on maximum contributions. So pre-tax dollars can be saved for retirement, a house, an education, a car. Commoners can borrow against their savings for, say, 5%, 1% over what they're making. or they can get an equity loan up to 80% of their home value for, say, 3%. So they can save without fear of needing the money later. Rather than hiding money in different pockets in case one gets robbed or the gamble goes bust, the commoner can move her money in one place, secure in the knowledge of a steady and sufficient income in retirement. You don't need stocks, gold, Bitcoin, or other speculative investments that could go up or down. Your money may not make a killing, but it will make a living equal to the cost of housing in your commonwealth. Me and the Mathew. This is my conversation with Mathew Crawford in the comment thread. I wrote, I watched this over time and some parts twice. I'm still trying to wrap my head around computer-generated currencies, so tell me if my assumptions are correct. 1, they're mined by computers using large amounts of energy for no other purpose. 2, they belong to whoever owns the computer and buys the energy. 3, they're sold for one of the imperial currencies at whatever the market will bear. 4, they then fluctuate in value like a stock does, relative to an imperial currency. 5, like the stock market, they have no intrinsic value and aren't backed by anything. The words Ponzi scheme were occurring to me. It seems, Mathew, it wouldn't change anything about how the oligarchs control us. Perhaps the people in your network could use Bitcoin to buy a house and some land outright. But for the other 99%, they're struggling to pay their rent or mortgage as the noose tightens. I think the powers that be are definitely drying up the money in circulation. So what to do with extra money to preserve its value only changes oligarchic control for a few. For the rest, the bankers are still owning their houses, lives, and labor through the mortgage. Our conversation continued, and I have reposted that in the Substack. Mathew concluded by saying, if you think that Bitcoin is backed by nothing, then you don't understand the basics. I suggest you read up on it, otherwise you're wasting both of our time. So if there's someone else who could explain to me what real-world asset Bitcoin is backed by, I would appreciate that. Mathew also felt that his health precluded him putting a lot of attention on my Caret system, and I appreciate him explaining these points. But the two are really not in competition because they serve different purposes. If people put their savings in Bitcoin or the US Treasury buys Bitcoin, it won't change the fundamentals that the banks own all the houses and therefore our labor for free. It will make no difference to the majority of people who are struggling under skyrocketing costs for housing, healthcare, higher education, and hope for retirement, what I call the unaffordable 4H. And what I used to call the cheap EFG, energy, food, and goods, are now ballooning also. So the noose of disappearing jobs and scarce money in circulation is tightening around our necks. My argument is not against Bitcoin, but why the Caret deserves as much attention because it solves more problem for far more people. The Caret is backed by our houses. The Caret provides the incentives for building our future. It doesn't solve our problems for us, but it gives us the tools to solve them for ourselves. And that seems like it's worth investing a little of our time. And I suggest that we all aspire to be simple-minded. To follow up, this is Inflation Colonization that explains how inflation really works and why your house is not worth more, your money is worth less. And this is MMT and Home Economics on Magic Monetary Theory, explaining how deficits do turn into someone's assets, and we need to make sure that someone is the community. Thank you for watching.